Hey guys, this is Ashish from hwifx, and this video is going to be about mitigation block. Okay, so now let's start the video. So what is a mitigation block? How it works? Okay, let's see. Market is bearish, creating lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. Then what will happen? Market will create a new lower high, but it fails to break or sweep the low, and then what will happen, it will break the high and then come back and it will buy like this. Then the series of candle or one candle over here becomes mitigation block, and this is a bullish mitigation block. What happens when market is bullish? Let's see, market is creating higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. What will happen? Market fails to create new high or sweep it. Then market will break the lower high and then start selling from the mitigation block. So this candle or the series of the candles over here becomes mitigation block. Okay, the very important thing why we say it mitigation block, because if we are bearish, so it will, market will fail to sweep or break the low. So market will fail to sweep the high over here and then it will break the low. Okay, and the same scenario happens here. And when we talk breaker block, what happens in breaker block? In breaker block, market does a fake break of structure or a liquidity sweep to the upside, and then it broke the market side, and then this candle called breaker block or the series of candle called the breaker block. Okay, but in mitigation block it fails to sweep the high or fails to sweep the low, and then it does a market structure shift to the another side, and then this single candle or the series of the candle called the mitigation blocks. Okay, so this was mitigation block. Now let's have example in the live market. If we can find out example of mitigation block, it's rare in the market, but let's find out. Okay, so if we see something over here, let me check. Okay, yes, we find one example here. If we see, this is this was the liquidity sweep. Okay, then if you see what market did here, market sweep, then went up, then fails to sweep this low, and then break this high, and then came back to this mitigation block and go up. So what is the mitigation block? This becomes a mitigation block here. Okay, if we delete this, if we see properly, this is a mitigation block. So this was a mitigation block entry. We could have entered at the 50% of the mitigation block, low stop loss below the mitigation block like 20 pips, and then target this high. Okay, and then this 1 is to 4, 1 is to 4.5 trade was absolutely done. So now let's find out the example for a bearish uh, mitigation block. If we can find here, let me check. Okay, no, okay, yes, we find it here. If we see, this was liquidity sweep. If you see, market swept the liquidity, and what happened here, market swept the liquidity, market could not took this high. Okay, market failed to take this high or do a fake liquidity sweep here, and then market broke this low to the downside. Then what happened, this candle, two candle becomes the mitigation block, and then it sold. So this was for a bearish mitigation block. If we see, this becomes here mitigation block. Okay, so this was a very nice example of bearish mitigation block, and that was here bullish mitigation block. So I hope you guys understood about mitigation block. If you have any question, ask in the comment section, and I'll try to answer those questions. Okay, so this was all about mitigation block. So I hope to see you in the next videos. Thank you, everyone.